Video we are looking at your November 2022 grade 10 accounting paper 2. We are doing question 3. It's tangible assets and internal controls. Okay, so it's 25 marks, 20 minutes. So question 3, tangible assets and internal controls. So 3.1, tangible assets. The information below relates to Oceano Traders for the financial year ended 28 February 2022. So it's really important to know when your year ended and when your year started. So if our year ended on the 28th of Feb, which means it started on the 1st of March 2021. All right. Now, we are required to calculate the missing amount in the tangible asset note for 17 marks. Okay, be careful of that. And then you were given information, note on tangible assets 28 Feb 2022. You're given vehicles and equipment, and there is your note there. And then additional information that we need to take care of and some adjustments. So vehicles, depreciation on vehicles is calculated at 10% per annum on cost price, and a new vehicle was purchased on the 1st of September 2021. Now, equipment, depreciation on equipment is calculated at 15% per annum on the diminishing balance method. No equipment was purchased during the year, so that means no additions were there. Now, 3.2, so it's a different question. We will look at that later on. All right, so now let us continue with our 3.1 and see what we are supposed to calculate at first. So 3.1.1, this is it. We are supposed to calculate your accumulated depreciation. So what do we have? We are given our cost price of 230,000, and then we are given the carrying value at the beginning of the year. So you know that your carrying value is equal to cost price minus accumulated depreciation. Okay, so our cost price here is 230,000. Okay, so let's start with our carrying value. So our carrying value is 152 equal to our cost price of 230,000, but we don't know our accumulated depreciation. So from there, you can simply solve for x. So now accumulated depreciation. Okay, so let's take our calculation to the answer book. Okay, so let's simply erase that. So if you take your calculator, it's just simply going to be 152,000 minus 230,000. So you're gonna get a negative answer, but your x will also be negative, so it's 78,000. So it can either be 78,000. Okay. And then 3.1.2, we're supposed to calculate the cost price of a new vehicle. So let's check the information. What do we have? 3.1.2. This is it. As we were given our cost price at the start of 230, but when we closed with a cost price of 380,000. So how do we get what was added? So at the end we have 380, but when 380 is equal to 230 plus whatever we have added. So now we also solve for x again. So it's going to be 380,000 minus 230,000, which is 150k. So you take your answer, you just simply say it's 380 minus 230k, which will give you 150,000. So your answer is 150. And then we are supposed to look at depreciation on vehicles 3.1.3. 3.1.3, it says depreciation on vehicles is calculated at 10% per annum on cost price. But now it says here, a new vehicle was purchased on 1 September 2021. So when you are doing your vehicles depreciation, you have a new vehicle, so it has to have its own depreciation because it can't depreciate for the whole year. So it was bought on the 1st of September. Now we know its value. We know that its value is 150. Right? Now, this is where you need to draw what we call a timeline. So this is your 1st of March, April, May, June, July, August, September, October, November, December, Jan, and then you have Feb. So if you are really confident, you don't need to draw a timeline. But if you want to get your answer as the most correct answer, that I recommend that you draw a timeline. All right. So you have September here. This is when you bought your vehicle on the 1st. So that is why we include September. So on the 1st of September, you bought the vehicle. So it's September, October, November, December, Jan, Feb. So you used it for 1, 2, 3, 4, 5 months. So it's 5 months, right? So it is going to depreciate for 5 out of the whole 12 months, okay? And it depreciates at 10% multiplied by the cost price because it depreciates on cost price, right? So it's 10% times 150. Now let's calculate how much that depreciation is for the new vehicle only. So it's 5 over 12 times 10%. Okay, let's look for the percent times 150,000. So it's 6,250. Now we are supposed to calculate okay, look, wait. It's 1, 2, 3, 4, 5, 6. It's supposed to be 6 months, not 5. Okay. So it's supposed to be 6, but not 5. So this is why it is really important for you to draw your timeline. Okay, so let's rectify the mistake there. So it's 6, so that's 7,500. All right. So it's 1 because we are also counting here. It's 1, 2, 3, 4, 5, 6. Yeah, it's 6 months. So it's really important to be careful when you're doing these calculations. All right. And then now we're going to check our depreciation for our old vehicles that we have been owning before we bought the new vehicle. Okay, so our cost price was 230,000 before we bought, and then we depreciate by 10%. Then they depreciate for the whole year. So it's basically 10% of 230,000 times 10%, which is 23,000. Okay, so let's just take our calculations to the answer book so that it becomes much more simple. All right. Okay, so let's take that here. So now we are just going to add 7,500 plus 23,000, which will give us 30,000. Almost said 30,700. It's 30,500. Okay. All right. So we are moving on to the next one. Next question requires us to calculate the cost price of equipment at the beginning of the year. So how do we calculate that? The cost price of equipment at the beginning of the year. Remember, we said carrying value is equal to cost price minus accumulated depreciation. Now you are given your accumulated depreciation as 130. Okay, let me just simply remove all of this. All right. Okay, so that we can continue working on a clean space. So it's 130,000 here, accumulated depreciation. Your cost price we don't know, but your carrying value you're given 290,000. All right. So let's just get that number nice and clearly. Okay. So now what you do is simply solve for x. You take 290,000 minus 100 or plus 130,000, because this is a negative. When you take it this side, it becomes a positive, is equal to x. Okay, so let's add the two numbers and see what we get. It's 130, so that x is equal to 420,000. Okay, so now that's your cost price. Okay, so what you simply do here, we added 290,000 plus 130, which gave us 420,000. Okay, so that's your answer, 420,000. Now 3.1.5, depreciation of equipment. Depreciation of equipment, what do we have on our additional information? Depreciation on equipment is calculated 15% on the diminishing balance method. No further equipment was purchased during the year. So when they say diminishing balance, it means we calculate depreciation on the carrying value. We calculate depreciation on the carrying value. So what is the carrying value of equipment at the start of the year? 290,000. Okay. Now, what's the percentage? It's 15%. So you just simply say 15 over 100, or you can just say 15% times 290,000. Okay, so let's get what that will give. 290 times 15%, and I'm getting 43,500. That's 43,500. Now 3.1.6, we are required to calculate the carrying value at the end of the year. Equipment. Okay, so we're looking at our equipment. We're supposed to calculate our carrying value at the end of the year. So depreciation, we have our depreciation here of 43,500, and then our carrying value at the end. Okay, so let's see, our cost price was 420 here, so that we could easily calculate the carrying value. So nothing was bought. Okay, so if nothing was bought, now that simply means we are going to say it is 420 here, it is 43,500. Now what we are looking for is the carrying value at the end of the year. But if nothing was bought, your cost price will definitely remain the same, because it is 420 here. Your cost price does not change. So that will help you into determining what your carrying value is. So you can just simply take your 420 and then you subtract your 173,500 to rectify if your answer is correct. But now, before we do that, we are supposed to check your 290 that we got, or that we were given. So your 290 is your carrying value. If you take your 290, you remove your depreciation. This is where you will get your carrying value at the end. Okay, so I'm saying your 290 minus your depreciation is your carrying value. You're going to get your carrying value at the end. So it's carrying value at start minus depreciation, which is 43,500, which will simply give you let's see, so it's 290,000 minus 43,500, which is 246,500. So this is your carrying value at end. Okay, so let's take our calculation there. So it's 290 minus 43,500, which will give you 246,500. So it's 246,500. Okay, so now we're saying cost price of the equipment at the end of the year. So the cost price did not change because we did not buy anything during the year. So it is going to be simply 420. It's 420,000. But if you want to check your answer here, like I said, if you wanted to check that your answer here was 246,500, you could have simply taken 420 minus 173,500. Okay, so that is not always the case, because here your cost price might have changed because of additions at cost price. But in this case, we don't have any additions, so we proceed with the 420,000. Okay, so I think we can simply move on. Yes. Okay, so we can move on with 3.2. So Sizanani Traders, Selby, the owner of Sizanani Traders, provides free delivery services to all customers who buy in bulk and stay within a distance of 8 kilometers. The sales figures were low in the previous month, but delivery expenses did not decrease. He suspects that delivery expenses are high because of private use of business vehicles. So, if we analyze this scenario, it says they provide free delivery services to all customers who buy in bulk and stay within a distance of 8 kilometers. Now, the sales figures, let's say sales figures were low in the previous month, but delivery expenses did not decrease. He suspects that that delivery expenses are high because of private use of the business vehicle. So when they say private use, they mean that employees are using the vehicles for their own purposes, their own private uses. They go wherever they want to go instead of doing their job. Okay, so 3.2.1 says explain how the business is affected by private use of its vehicles. So if employees are using the vehicles for private use, this is going to be costly in the business, whereby the business now has to buy more fuel. The first things first, when you use a vehicle, that is where you buy more petrol. Now, there's what we call wear and tear. So when you're using the vehicle more frequently, it depreciates at a higher rate. Now you have to repair the vehicle. So your insurance will also might go up because incidents or accidents happen whenever vehicles are used more frequently. So our conclusions here, we can say that fuel expenses will increase. So now, okay, repairs expenses will also increase. Expenses will increase. Okay, I know they said 2, but I'm just going to give you guys some more answers. But these are the type of questions where you have to have your thinking hat on, where you need to think outside the box, but not only on the concept of accounting, but in real life scenarios and real life situations. So the last one I was talking about was whereby vehicles might depreciate at a higher rate. All right. Now, okay, you can either talk about your maintenance, whereby you have to do your servicing, because vehicles, they need to get checked and be maintained by professionals. So now they will have to be maintained more frequently. Okay, so you can also add that. Now, the last one, I think it's the last question. It says, provide the control measures that should be implemented by the owner to avoid mismanagement of movable, tangible assets. State 2 points. So in this case, let's say we are talking about your vehicle. So what can you do when you want to avoid mismanagement of your tangible assets? So let's say you don't want your owners, your employees to drive anywhere they want with the vehicle, the company vehicles. So this is whereby you will install car, let's say car or vehicle trackers. Okay, that could be one solution. Now, a logbook where employees record all their trips or deliveries and the distance traveled. So this is to gauge or to compare the fuel expense used by that certain car and the records of deliveries or trips that were made. So this is the end of the video. It was so nice doing this paper with you guys. I hope it was productive and really helpful. So please don't forget to like, share, drop a comment on any accounting concepts that you might need help with, whether it is your paper 1 or paper 2. And also, please don't forget to share with family, friends, or anyone who might need help with accounting. Thank you so much once again for being with me. I will definitely see you guys in the next video.